With a common denominator.
And I need all of you to stop what you're doing and listen.
Let's talk about something important. Put that coffee down.
I'm not here to waste your time.
Where else you gonna have this much fun?
You the man. You the man.
Todd Father.
Show me the money.
What I've been doing, had to triple my bag. Had to triple my bag. Wow. Had to triple my bag. Wow. Had to triple my bag. Yeah. Had to triple my bag.
60% of the time, it works every time.
That doesn't make sense.
Well, it's no trick to make a lot of money. All you want is to make a lot of money.
And we are live. What's going on?
How's it going, guys? Welcome back to another live show here at Learn Crypto, your one-stop shop for crypto and stock technical analysis, fundamental analysis, and news. My name is Nick Hellman.
I'm Todd Butterfield.
How's everybody doing today? Let's see who's in the chat box. We see Frank in here. We see Cameron Work. I see J.R. Riggs. Been a while, man. Still got the same picture as me. Probably need an update picture, same as me. I used to have hair in mine. I know you've had that picture since 2017.
And Carrie's in there.
Make sure to smash that like and subscribe button, guys. We are getting back into the Duo Live show. If you want more 24/7 access to Todd and myself, check out patreon.com/learncrypto or learncrypto.io. I guess we'll hop right over here to CoinGecko, Todd.
That's
real
cool.
quick. Not a ton to talk about here. I mean, really, today's been pretty flat. The stock market is minor green, so everything's just kind of holding in lockstep. Bitcoin's still at $23,386. Ethereum still kind of leading the way at almost $1,900 with 1 month until the Ethereum merger. I do have some news articles. We'll talk about the Ethereum merger here in a little bit. Scrolling down here, the only things that have really done anything meaningful the past 7 days are the dog coins. Dogecoin up 11%. Shiba Inu up 16.2%. And then we do have Floki, our favorite. Hasn't done much this past week because it was kind of leading the charge before those. But if we go ahead and look on the 30-day or 90-day chart, up pretty significantly off the lows. Could potentially be making a pork blaster up here. If it can hold this 0.13 level, then we do like it for a measured move, which would make a 30% rally from this potential breakout point. Of course, I'd probably be on the back of Bitcoin going to 24 to 25,000 if it does do any kind of minor retrace here with the stock market. So that's kind of really it. Usually we have more going on in CoinGecko, but as you can see, everything is pretty much flat across the board in the top 100. Top 200 is much of the same. Nothing is really outpacing. Nothing is really getting crushed at these levels. No major FUD going on. So nothing too exciting, but I know that Todd has some insight on what his thoughts are for the stock market over the remainder of this week, which will directly impact the price action we see in cryptocurrency going into this weekend. Do you want to take a look at the charts before we go over some news, Todd?
Yeah, last week we had went over. I was looking for a little bit of a pullback. I said higher for 3 or 4 more days and then a pullback. Pretty well that's been spot on. Let's go to the chart here. This is the Bitcoin chart. You can see we did roll over a few days ago, turning down. I'd called the first rally off the low was the green 5 waves up and an ABC pullback. Since then, Elliott wave's been a little sloppy, I think. I had mentioned this is possibly a count where we've had 5 waves up coming into the highs of or on the 12th, and some type of maybe ABC pullback since then. That's not a clean count, but if you look at Ethereum and some others, that count looks a little more appropriate. That would say, once again, supports down here 22,450, 22,700, and then higher from there. Really, Bitcoin's been following stocks as we've been showing. Let's go to the Russell here on the daily. This is extremely bullish count. I'd shown this at the low at expanding or a ending diagonal for a wave C of a yellow 4 here. And then we're working on 5 waves up. I'd mentioned last week, I thought the wave 3 was ending, ushering a little pullback for a few days, and then still just keep stair-stepping higher. So I'll show the Wyckoff charts here in a minute, but that's been my thoughts. And then that would show that we're going to new highs.
Yeah, if that plays out, what do you think that does for Bitcoin? Say we get to the green 3 up there. Do you think that's like the 30 to 40,000 Bitcoin range, or
yeah, I would think 30,
that
40, I think 40,000 we could get up there. If we are going to new highs on stocks, then Bitcoin, I'm sure at some point is really going to catch up and really rock and roll. Let me show 2 more charts here, because the bearish count is that the rally that is ending now that I'm looking for is actually a wave 2 ending, and we're ready to get crushed. That's not my preferred count. I don't really believe that's what it is, but that's something we've got to be on the lookout for. And if you look at the SPY, I've showed this count where the 1-2 is not over with as of yet. We're just finishing up the first ABC higher, have an ABC down that's deeper than I'm expecting, and then an ABC up again. So, but once again, I still think personally, I like the way the action is. I think the bearishness at the lows was tremendous. So I'll show some Wyckoff charts here when we come back to me once Nick goes over a few things.
Perfect. Let's just take a quick look at a couple news articles. Nothing really crazy. The Bitcoin liveliness is the lowest since 2021 amid new 5-year Bitcoin holder record. Now, I don't really care about the liveliness. That really is meaningless to me. But the new 5-year Bitcoin hodl record shows to me that long-term holders and whales are continuing to accumulate, and their Bitcoin are staying dormant. Bitcoin long-term holders are knuckling down as a record portion of the Bitcoin supply stays dormant for years. Data from on-chain analytics firm Glassnode confirms that the percentage of the supply now stationary for at least 5 years is higher than ever. 2017 Bitcoin buyers are not this year's sellers. Bitcoin has recovered almost 40% from its macro lows of 17,600 in just 2 months. So if we didn't sell on the way down, really the trade the past 2 months has been just hodling, because we have rallied 40% in Bitcoin and 100% in several altcoins. Not selling the low was a trade. The trade is to stay long and look for higher levels. If Todd's bullish count is right on stocks, we would be looking to probably hodl most of our positions until around $35,000 to $45,000 Bitcoin, reevaluate, and maybe we have a large sell, maybe selling 50 to 75% of our assets at that level, as then we could see a more substantial decline. But that would say that the 17,600 low would be the low for this move. Those who purchased Bitcoin in 2017 or earlier continue to hodl their stake, and the trend points to more, not less, hodling in the recent times. Not content with the reversion above the 2017 highs of $20,000, long-term holders remain committed to not selling, the Glassnode data shows. So we're going to continue to stay long here. We're going to closely monitor the 2 counts that Todd has for Bitcoin, although even the bearish count would still say that the $17,600 low in Bitcoin probably will hold. That obviously is not as good for our wallets. The more bullish count would be better for our wallets. Assets continue to appreciate. We continue to capture passive income. Our pre-sales that are about to launch, including Shibby Dinos, Niftables, and some Entree, and some of these other ones, will have a better launch, maybe a 5x, 10x, and hopefully we can sell into a more substantial relief rally here for Bitcoin. None of the counts that he's showing show a new all-time high for Bitcoin on this rally, but if we can get into the 30s, get close to 40,000, and then our technometers get overbought, our RSI gets overbought, and stocks are looking toppy, I think that's a good indication not to sell all of our assets, but sell a larger chunk than we normally would, 50 to 75% on a trade there. But again, markets always change, and we'll stay tuned and keep a closer look. Todd, do you want to take a look at some other charts, and then we'll come back to me after we look at Ethereum for some Ethereum merger news?
Yep, sure enough. Here's our Wyckoff software on the SPY, and our technometers have given us the overbought readings that were in red, and we had 2 back here on June 27th and July 7th, and then those are the first ones that didn't really work out when we had this breakout of the ending diagonal. And you can see here we had another sell-off, but then a 4 or 5 day pullback is all we could muster. That just shows everybody was caught short. There was a lot of buying down here. This chart also would show up well on the DIA, the Dow Jones Industrial ETF, because here we had the same type of thing. some pretty good sell signals on the way down. And then it was weird here from July 20th to August 2nd. We went from an overbought technometer to an oversold technometer. That was kind of a tell that something was changing. This was showing on the technometer. We had a lot of selling coming in to that August 2nd low. Technometer got oversold 38.29. And then that kind of what has catapulted us here in the last 2 weeks. So again, I like that action. I think we're still headed higher on stocks. Notwithstanding, we have been overbought here recently. Let's look for maybe 3 or 4 days down here and then see if we can get some more buy signals for stocks, and also to add to crypto positions or add some new ones to the portfolios. Same type of thing here. You can see overbought on the IWM, had 4 or 5 days sideways. Technometer went from a 54 down to a 42. So again, that was telling you something was going on. We broke the downtrend line and was holding it. So that's why I'm still bullish and leaning bullish. Nick, I'm going to take it back to you, then we'll come back to some Bitcoin charts on our Wyckoff software.
Perfect. Let me go ahead and share my screen here. All right. And we're going to hop over to some of this. So the Ethereum merger has been all the talk on Twitter, and really why the market has seen some of a rebound. It's kind of dragging it higher. Now, it is approaching. It's still scheduled somewhere between September 15th and September 19th. It really depends on block times, etc. But a lot of people, after 3 years thought this was going to be a major breakthrough. Although it will bring staking to the network, which brings in more institutional investors, it will impact other things as well. People thought that transaction prices would be going down as well. Well, after you read a couple of these articles, maybe that's not so much the case. Economic design changes will affect Ethereum's value post-merge, says Consensus Executive. Right now, staking on the Beacon chain carries the risk that the merge doesn't happen. But once it does, participation in staking is more accessible and has less technical risk. I think you're going to start to see more institutions pouring into Ethereum along with Bitcoin, only because Ethereum will have a low APR and something of very little risk within the crypto ecosystem, and be much more simpler than more of the complex, high-risk platforms we see in DeFi right now. We expect that risks of projects and business opportunities can be evaluated against merely staking ETH on a risk-adjusted basis. This may also affect the decentralized finance DeFi space significantly, as products need to compete with the returns offered by the core protocol. That should in turn mature the market and create opportunity costs for investors chasing yield in places with too much risk. When asked about people's expectations and misconceptions about the merge, the expert highlighted that it will not lower gas fees. It will not lower gas fees or solve for massive throughput yet. However, the merge sets the foundation for these things in the future. Following this, Sokolin mentioned that the merge will remove one of the less desired narratives for Web3, which is the issue of ESG impact. Hop over to another article where they mention it once again. Ethereum Foundation does agree and clarify that the upcoming merge upgrade will not reduce gas fees. Why is this important? Doesn't seem like much of an issue now. Gas fees are at $8, $4, $10, doesn't matter. But that's because the entire crypto market is down. Less people are buying NFTs, less people are playing with tokens, less tokens are being launched, as we see with the pre-sales. But once all that comes back, bullish momentum comes back in the market, the fees are going to skyrocket once again. So this new merge, this proof of stake, this retail-friendly network, nothing is really changing from a cost perspective, meaning that once again, you're going to have to pay $40, $50, $150 for a transaction to buy your NFT, which does price out some of the NFTs. So what I think you're going to see is Ethereum is going to continue to lead the charge. If the merge goes well, great. If proof of stake does offer some kind of sustainable low-risk APR, great. That brings institutions into play. Ethereum will continue to rally. All these layer 1 solutions, maybe a BNB, maybe a Polygon, Solana, Avalanche, they might lag a little bit because people are like, oh, Ethereum's going to take over. But as soon as those gas prices take off once again, people realize that the merge didn't really impact the gas prices. They're going to continue to go back to those cheaper chains. And I think that's when layer 1s will rally once again. Hopefully we can be on the right side of that trade and take advantage of that opportunity. Gas fees are a product of network demand relative to the network's capacity. The merge depreciates the use of proof of work, transitioning to proof of stake for consensus, but does not significantly change any parameters that directly influence network capacity or throughput. So like I said, I think Ethereum will continue to lead the charge. Maybe some of these layer ones will lag as people are going to rotate and say ETH is king. Nobody can beat ETH now again. ETH's amazing. You're going to get institutions starting to stake and create nodes on Ethereum to earn that APR as a passive investment. But once the bull market comes back, Bitcoin gets to 30,000, 35,000. People are throwing money at NFTs. People are throwing money at pre-sales. Those tokens are launching. Ethereum's cost is going to increase, and you're going to see investors once again rotate to Polygon, rotate to BSC, Avalanche, or whatever it may be, and that will be the trade. So for now, I think Ethereum continues to outpace. Then let's rotate over to layer ones, ride those to some highs, and see what kind of trade we get from the bigger macro picture from stocks and from Bitcoin.
I'm going to bring up the Ethereum chart that's here in front of us. This chart does look like we've had the 5 waves up that I was showing on Bitcoin much better for anyone out there knowing of Elliott wave. That means the 5th wave ended there on August 12th. We've got support on a pullback at the previous 4th around 1650. With Wyckoff, you can see on the lower right, technometer is sitting around 43, but that called the low August 2nd. That called the low July 11th, called the low June 28th. So right now, we're almost as oversold as we have been. So any further pullback, I think, down to that 1660, 1650 level should give us another good buy entry on Ethereum. So we'll be looking for that.
And if the stocks do a minor pullback, the next few days or maybe even into Monday, then that could be the setup on Ethereum, and that would be about 2 to 3 weeks out from the Ethereum merger. Kind of get that hype train going again, maybe break above that 2,000 level, get to 2,400. And then we got to be cautious of either the merger failing or the sell the news event. Now, I don't think it's a traditional sell the news event because it's not a partnership announcement or an announcement of an announcement or something minor. This is a major merger that has been in the process of occurring for the past 3 to 4 years. So I don't think it'll be a major sell the news. And if there is some kind of red bar, you're probably already too late. But I think the biggest fear for me is that the merger doesn't go through, or that there's some kind of issue where the merger happens and some of the nodes are disconnected. Some exchanges have the proof of work Ethereum. Some exchanges have the new proof of stake. Coinbase has to shut down trading. I think that's what I'm worried about more than a sell the news event. So let's see if that Elliott wave count can line up with stocks and we can get new highs moving to the 2,400 level before the merger. That would be ideal.
Yep. Let me go back here. This is our Bitcoin Bitfinex chart. You can see technometer lower right actually coming down to oversold levels. So again, that kind of keeps me bullish Bitcoin here. Our Bitcoin technometers from consolidated exchanges, which is 140, I believe it is a little bit more neutral. So again, I think we have a little more downside. And then with stocks and Bitcoin, Ethereum, etc. And then we're going to turn these things up again. I think Big House asked for sand. USD consolidated. Let's look at that real quick. I'm going to show the 6-month chart. Again, I mentioned last week some of these alts were underperforming. Looked like some type of pullback here to previous support. Support on this would be down there at 95. I don't think we'll get that deep. Again, you can see here lower right, you've got the OP is hitting new lows. And price is obviously holding the previous lows down there at 85, and the technometer is coming down to below 38. So I would say sand a little bit lower with Bitcoin and Ethereum. Could dig it in here and work higher. I'm going to go to SOL next real quick.
Yep, and then take a look at Netflix as well, and we'll talk about that. While you're waiting for that chart to put up, Patrick Rooney says, Nick, what sector do you see having the biggest potential next Altseason, Metaverse, PTE, Layer 1, Layer 2, etc.? I don't think it'll be play to earn. I think GameFi is a good fit for crypto, but nobody has solved the issue of all these play to earn. People don't really care about the underlying asset, and the distribution and inflation metrics get way out of whack, meaning that more and more tokens come into circulation, everybody's dumping, and then your chart just looks down and to the right, and there's no real surviving that. No matter how fun your game is, how easy it is. So there is some new GameFi projects that have come to my attention and pitched us over at Ferrum, and they're trying to solve some of these issues with token economics or a 2-token ecosystem. But until someone really solves that, I think play to earn is a really tough spot to get investment and a really tough spot to invest in real long-term investors. It's more for speculators or people who want to go make 5, 10, 15, 20 bucks a day and actually grind the game out. I think Metaverse will have another run because they had a huge run on the back end of this last Bitcoin run. But also Metaverse has a lot of money, funding, and sponsorships being poured into it. You also see Meta, of course, Facebook going that direction. And I think it will have a real-world use case, especially for the advertising and marketing side, especially with the explosion of NFTs. I think it just makes sense to have NFT galleries, NFT events within these metaverses. And we do have some network still. I think that's a really good metaverse built on Unreal Engine. And that's really our main exposure in that metaverse ecosystem. But I think that'll have another run. I think layer ones, like I said, after the Ethereum merger, once bull market comes back, Ethereum fees are high, then I think layer ones and layer twos are going to start to really see money flow back into them. And there's even this thing called layer zero now, which is kind of this multi-chain asset, which Ferrum's trying to create that mainnet. Nobody's really successfully done it yet. So I don't really want to get into the complexities of that at this point. But we'll see. Definitely not play to earn. I'm avoiding play to earn until I see a model that works. Sorry, Todd, go ahead.
You all right? SOL chart we had mentioned here, it did give us a buy on June 11th, June 12th, they're down at the exact lows. You can see here coming into today, technometer's 41.1, 38 or so, there's a green dotted line that shows oversold. That's why I picked the low there, June 10th to June 11th. So the last lows have been really around this 41 level. So I think it could pick up here, but again, I think Bitcoin, Ethereum a few days lower, SOL probably a little bit lower, and then probably get it down there where actually we get a 38 below reading and a good low risk entry for SOL.
Yeah, Joshua says there's a lot of layer ones that are interesting and a better option. Interestingly enough, Pulse Chain is a complete system state copy of Ethereum, which is attractive. Not live yet that I know of. You are correct, it is not live. It was supposed to go live a couple months ago. We actually sacrificed Ethereum at the best possible, the cheapest possible ratio. I think it was 10,000 Pulse Chain to 1 Ethereum or something like that. Whatever the earliest stage was, we hopped on board. We did not really get involved with Hex. You know, Richard Hart, people positive, negative, whatever they say, the Hexicans prove they have 10,000% returns on that. And a lot of the Hexicans are the ones that are investing in Pulse Chains as well as PulseX, which we also sacrificed at the best possible price, which tells me they're going to be long-term hodlers and get their tokens locked up in liquidity pools or staking pools, which leads me to believe that not only as an option against Ethereum, but the hodl base, the holder base is going to be hodlers, which obviously helps our bags, helps price appreciation. So we're keeping a close eye on it. They said they're getting close. It was supposed to be a month or two ago. I think it was smart of him to delay the launch due to the bear market. I think he's trying to launch more in a bull market scenario, which makes sense. But yeah, it's been a long time coming. I think we're going to make nice size gains on Pulse Chain, and it's nice to know that Joshua over here also has Pulse Chain on the radar. Todd, do you want to take a look at Netflix, as this is an open and active trade over at patreon.com/learncrypto. We have raised the profit stop twice now. It did just have a dip, but it held our stop level, and if it goes any higher, we're going to look to once again raise that profit stop.
Yeah, I've got the chart up there. You're not on that screen, but sitting here at 245, again, it looks like these could just continue to work a little bit higher. So we're still bullish in stocks. Apple, Microsoft, some of those still look like good long-term holds. So let me run our disclaimer real quick for our regulators. Hold on.
There is a high degree of risk involved in trading cryptocurrencies. Our thoughts and ideas are for entertainment purposes only. Please consult your personal advisor or do your own research. Past results are not indicative of future returns. Thank you.
All right, we're back. That's really, again, all I want to do is come on today. Still looking for that slight pullback, stocks, Bitcoin. And I would think here 3 or 4 or 5 days could be set up to enter some longs and look for still further higher.
Yeah, so if you have any other questions, ask them now. Carlos says, hi, Nick. With the probability that a handful to 20,000 altcoins available, how is Ferrum positioned to survive, prosper, especially during this bear market? Well, I mean, the bear market, we've already kind of had a low if we can work higher, and they've already survived. What they've done is they've reduced the salaries of some of their employees, but also realize that they do have products that earn revenue, staking as a service, IronVest. They continue to release products that continually provide revenue, and you can see that revenue because they post about buybacks and burns of the Ferrum token, which they use a portion of the revenue brought in by products to then buy back and burn Ferrum and FerrumX. Along with that, later this year, they will be launching their mainnet, which is going to be kind of a layer 0. They're looking to be multi-chain and allow people to deploy tokens across all the chains, all the popular chains, whether it's Ethereum, Polygon, Avalanche, Moonbeam, BSC. They've received grants, $100,000, $200,000 grants from all these chains to build the products and to launch the products across the board. So I think that does provide a long-term vision for Ferrum and its value. Also on mainnet that goes live, Ferrum and FerrumX get new utilities where they'll be used as the gas on the networks. Kind of like when we saw BSC launch, you started to need BNB to interact with it, and all the liquidity pools, what happened to price? And went to the moon. If the same happens with Ferrum's mainnet, the users go over there, you need Ferrum and FerrumX as a gas token, they probably will follow and go to the moon. So we'll see. They'll compete against all the other layer 1s, but since they are layer 0, they benefit from the success of other layer 1s as it is multi-chain. So as long as the other layer 1s do well, then there's a need for people to, and a want for people to launch their token on multiple chains. Well, Ferrum will be the easiest option for that.
Yeah, Mike Channel asked about us trading shitcoins. I mean, it's a small position of our portfolios that makes sense. So, and if we're starting another bull market, I mean, shitcoins are going to have a good rally too.
Are you guys not embarrassed to trade with shitcoins? Well, here's the other thing too. Yeah, some are shitcoins, but some of these shitcoins turn into mid-cap and large-cap tokens. When we first started trading Zen and creating nodes, the first people on the network, everybody said it was a shitcoin. Well, in the last bull market, it went to $150 and over $1 billion in valuation. Not so much a shitcoin anymore. Floki, when we started trading that, around 50 million valuation, it went to $1 billion valuation. Not so much a shitcoin anymore. BNB, when we got involved, at $6, 100 million valuation. Well, it went to $600. Not so much a shitcoin anymore. Matic, ADA, the list goes on and on. ADA, we got involved at 4.5 cents. It went to what? $3. Not so much a shitcoin anymore. So if you pick the right gems, they go from shitcoin to small cap to mid cap to a household blue chip, surviving multiple cycles, and that's what we're looking for. And that's what we found over the years. Now, not everything's a winner. We've had plenty of duds. We've had plenty of opportunities where we had chance of profits, held too long, and they went significantly down. So you can't win everything. But again, like Todd said, we also, in our Discord, we lay out a full portfolio structure. If you're more Todd structured, you do maybe 25% in some of the larger caps, and your portfolio is much smaller. If you go more with my structure, you still have the large caps, but maybe a 10% position. That frees up 1% and 2% positions for pre-sales, speculative play, shit coins, whatever you want to call them, and see if we can hit a home run like we have on BNB, Zen, Solana, ADA, whatever. Cake is another one that we did, which went from literally nothing to the #1 AMM on BSC currently, producing massive yield over the past 2 years. So,
Josh
that's why we do what we do.
says he's retired from Hex.
Joshua Raymond, yeah, Hex did amazing. Hex is one we really didn't take too serious, and we're kind of taking that as a case study for what Richard Hart can do and what that community do. And like I said, I think a lot of the Hex people are the ones that sacrifice for Pulse Chain and PulseX, and that's why I think there's going to be a nice impact on price there, especially considering if you were in our Patreon group, we did get in at the best possible pricing point. The way it worked is every day it got a little more expensive until the full sacrifice phase was over. We were in at the earliest possible days for both Pulse Chain and PulseX.
I think that's all.
And then Mike Channel, after that explanation, just says peace. Okay, well, there you go. I don't know how much simpler of an explanation I can give you, and apparently you didn't like it. Let's smash that like button, smash that subscribe button. Go to LearnCrypto.io to see what we offer. If you have any final questions, now is the time to do it. We're going to try to keep doing more Duo live shows. And if you want more 24/7 access to us, of course, you can follow us on Twitter. You see there at the bottom of the screen. I'm Crypto Hitman. Todd is Wyckoff on stocks. But patreon.com/learncrypto is where to see all of our active trades, our thoughts, ask us any questions from beginner to advanced. It's been a little quiet in there lately. There hasn't been many trade opportunities for us, but we're looking to change that around. As this Ethereum roadmap or this Elliott Wave roadmap continues to play out, we're in that Netflix position, and we're looking to capitalize on this relief rally in the market, and hopefully not going to sell too early, recapture some of the losses, turn them into profits on some of these altcoins, and continue to put our passive income to work, swapping it for either BUSD or BNB. And we got some pre-sales coming up from Ferrum as well. So things are going to start to pick back up as the market slightly improves. And with that, activity within the private Discord will pick up again. We are here to help, so don't feel free to always ask questions while we're live. But if you want us after the live show, you need to be in that Discord.
I was checking here. BNB is one that has been acting really well. That's my indicators.
Near all-time highs in the Bitcoin pair. Pretty impressive.
Tech's down to 42, so same thing there on BNB, a little bit lower. Should be a good entry on BNB. So I'm going to run the crypto Discord commercial and also the Learn Crypto course commercial. And then we'll be back here when opportunity presents itself to bring in some value. So we are out of here. Thank you. Later.
Warren Buffett, American investor, business tycoon, and one of the wealthiest people in the world, once said, "If you don't find a way to make money while you sleep, you will work until you die." But how is that possible? Well, knowledge is power. In 2020, it is no longer news that cryptocurrencies are the currency of the digital future. Bitcoin's stability amidst unprecedented global economic impacts from COVID-19 has proven once again that crypto is here to stay. Learning how to trade, when to trade, and where to trade crypto assets can make the difference between success and failure. At LearnCrypto.io, we offer a pathway to sustainable and lifelong wealth by helping open-minded beginners and experienced traders navigate the thin ice of the cryptocurrency markets. Live shows, interviews, coin reviews, fundamental analysis, predictive trading bots, and open chat access to a community of real traders. These are just a few of the benefits you'll receive with a membership on patreon.com/LearnCrypto. Sign up today if you strive to build yourself a brighter tomorrow.
LearnCrypto.io. Are you trading or investing in the fast-moving and exciting cryptocurrency markets? If so, you need to learn how to identify primary trading opportunities by implementing the Wyckoff trading method. This method was created by world-renowned stock speculator Richard D. Wyckoff and has been educating traders for 90-plus years. This course teaches you all you need to know to increase your returns while minimizing your risk using the Wyckoff trading method. Over 1,000-plus students have enrolled in the course since its launch in late 2017. Let's hear what some of the graduates had to say about the course. Craig says, "This is a great course for the crypto trader. I have found it written in an easy-to-understand format and thorough in its content." BTC Capital says, "I have tried to study TA for a few years, but until I purchased this course, I had been floundering." LearnCrypto.io is owned and powered by wyckoffsmi.com, the original institute started by Mr. Wyckoff in 1931. Enroll today in our cryptocurrency course and you will receive lifetime access to our current 24 lessons as well as new ones we add. Also gain access to our course group at LearnCrypto.io to talk with Mr. Butterfield as well as other students as you proceed with your studies. You will also receive 1 free month to our Patreon Discord paid group, as that is where we give our personal trade setups to our members. This is the only place where you can gain access to our proprietary indicators known as the Optimism Pessimism Index, the Force Index, and the Technometer. Take advantage today of this excellent course and begin reaping the rewards of a time-tested method from the grandfather of technical analysis, Richard D. Wyckoff. To get the best experience, download our Learn Crypto app and get started today.
We'll see you all again. Sleep tight.